I've been correct about every upward and downward move over the past few years. You could go through every single one of my YouTube videos. You could look at every single swing trade that I've ever taken, and you'll see that where I put my money, where I say that the market is going to go in my YouTube videos, has always been correct on a larger time frame. Day trades, great. But when I say the market is going to get a pullback, or when I say the market is going to bounce, there's not been one single time where I've been incorrect. And you could take that to the bank. So for years now, this has been correct. For years now, I've been consistent. So when someone is correct and consistent on a yearly basis, multiple times in a row, what does that really tell you? It tells you that that person understands the market, right? It means that whoever this person is understands the market well enough to know when certain things are going to occur. So if they've been correct in the past, chances are they're going to be correct in the future. And this last prediction of when I said the market was going to get a pullback, you can see my last YouTube video, is no different than the past. So I said that the market was going to get a pullback. In today's video, I'm going to explain why I thought that. We're going to go over the overall market, what the next steps are. We're also going to take a look at macroeconomic news, what all of this has to do with the overall market, with Israel, Iran, what that's going to do to the overall market dynamic as a whole. So we're going to take a look at all of that. We're going to take a look at the SPX seasonality. We're going to be taking a look at the large tech stocks, the VIX, everything all together. And what I really want to do is I want to start making these longer sort of YouTube videos where I do a market analysis, technical analysis, and also an overall macroeconomic view, or maybe talk about important news or important things that I want to touch on. So I want to do that on a more consistent basis, and we can see how that goes. Okay, so I hope you guys enjoyed today's video. Please make sure to let me know if there's anything that you guys would want added or not added, or what I could do differently. All right, but let's see how this video goes. I'm excited. All right, so let's get started. Okay, so this is the thing that I want people to understand. Yes, the market dropped primarily off of news. Great. Spectacular. But what we do is we analyze large tech stocks and the overall market as a whole, while also putting news in conjunction with the technical analysis. So what we saw, and I'm going to show you guys this as the video continues, what we saw was these large tech stocks started to show weakness. Now, what does that mean in my eyes? It means that big money is starting to become bearish for whatever reason. These are people that manage trillions of dollars. These are people that have direct contact with weapons manufacturers, with BlackRock, with large banks, hedge funds, people in control of certain events that are going to occur, right? So if all of these people are connected, and if these large tech stocks, and if investors in these large tech stocks also know something is going to occur, then it becomes easier to see where the big money is going and how they're responding to certain levels. So then you could essentially just trade based off of that. Okay? So now what I really want people to understand is, for example, if BlackRock owns weapons manufacturing stocks, tech stocks, every stock, every sort of industry, right? Don't you think that higher ups or executives in BlackRock will start to adjust their portfolios, enter or exit trades based on what they know is going to occur in another sector that they're invested in? Does that make sense? So that is essentially another reason why looking at technical analysis, yes, you can just be like, oh, it dropped because of news. But this occurred, and you could have also captured this move without even following any news. You could have just followed the exact technicals of what we saw on the chart. Okay, we were doing both, but my argument stands. You can do that by also looking at the chart. So I'm going to go ahead and show you guys exactly what I'm talking about here. All right, so this is Tesla. What I first want to go over are the large tech stocks. What we were looking at in the large tech stocks. There's clear weakness, okay? And we saw that Tesla was creating a bear flag. Bear flags are extremely bearish patterns, okay? Bear flags means that you're going to fall afterward. So we saw a bear flag, major resistance on Tesla at 340, with the bear flag hitting this level essentially, failing, and dropping afterward. So when you're at a level of resistance like this, building a bear flag, this becomes the most opportune time for shorts to load up on shorts and for people to become bearish. Now, okay, so this was one factor of why I wanted to become bearish. And we have to look at Tesla because Tesla is one of the largest tech stocks, right? So that's Tesla. NVIDIA, not as bearish. It was not as bearish, but when a large, huge, bullish mover like this starts to stagnate, the 144 level on NVIDIA was extremely strong resistance. When a large tech stock like this starts to stagnate at a level of resistance, that's not bullish. That is more of a chance for the market to cool down, okay? Because basically what this means is if NVIDIA was continuing to show extreme strength, then yes, the overall market would follow up and inch on behind NVIDIA. That was not occurring. Instead, NVIDIA started to chop around. Because NVIDIA started to chop around and because it could not continue with this extreme momentum, it caused the market to not have another reason to show strength. Very simple, right? So NVIDIA, Tesla, Google, same concept. Google hit a very major level of resistance, similar to Tesla's 340. We ripped into this level of resistance, started to fail at this 183 level, pulled back. Apple, another similar situation. Apple could not break above the 204, 205 level. Also created a bear flag. Also came to a major level of resistance. Failed to break above that level of resistance. Gave investors, traders, a very good opportunity to go short. We got a huge, nice, juicy red candle. Right? So what ended up happening? Apple was just, when Apple starts to really move, the overall market starts to move. So what do we see with Apple? Big red candle. Came down, broke 200, and actually, started to hold a level of support. Great. What are people starting to think? Apple is going to bounce. Great. Yeah, we might get a bounce out of Apple. The next day was a little green. All right, we wicked down below. Right? This is just disgusting. So we wicked down below. Right? People began to think, oh, wow, this was a stop hunt. We broke below major support. This was a stop hunt. Stop losses got hit, and now we closed green. Boy, were they wrong, because what ended up happening afterward was, yes, we gapped up, right? We closed at 199.20. We opened at 199.73. So we gapped up 50 cents. But we ended up making another leg lower because the overall market was not strong enough for a bounce. So Apple, this was a clear cut. Once we broke down the prior lows over here, it was just a free-for-all. It was very, very easy opportunity to go short because this level of support was the prior low, right? Was where the market wanted to try to create a bottom. Because it could not create a bottom here, and because we tried to show some sort of a bullish move, once that broke, it gave a great opportunity to go short afterward for a day trade. Apple, Apple, Google, Tesla, and NVIDIA, all showing weakness at levels of resistance. That is 4 of the largest tech stocks. Okay? We can also take a look at Amazon. Same concept, similar situation. Started to hit 218, 219. This is very, very extremely strong out of Amazon, right? But once again, as the other tech stocks were starting to show some weakness, Amazon began showing some weakness as well. Big red candle with 2 days of follow through to the downside. Nice and simple. Now, what isn't exactly as simple, Microsoft. Microsoft was the biggest winner, but it can't do all of the work alone. Does that make sense now? So now we have to monitor all of the stocks at once. If we see one doing really, really well, it is not generally strong enough to pull the rest of the market up. Okay, so that is unfortunately the situation for Microsoft. It's doing great, but it's not enough to pull the market up. Netflix also doesn't help that Netflix was also showing a lot of weakness. Same concept. Meta, same concept. Okay, all of these stocks were showing some weakness at levels of resistance, except Microsoft. When the majority are showing weakness, you have to assume that there's going to be some bearishness. That's essentially why I became bearish. That's exactly why I ended up making the video showing that I thought the market was going to get a pullback. Here we are. News or not, technicals don't lie. These people, they knew that the market should be getting a bit of a pullback for whatever reason. Maybe they have contacts in another industry. Maybe they knew there was something was going to occur. So you know how Trump and Israel gave a preemptive warning. Maybe just Israel. Israel gave a preemptive warning saying that they were going to attack Iran. That's when they decided to share it on the news, on mainstream media. You don't think these people would have communicated somehow, some way, prior, in private? That's essentially what I think ended up happening. And mixed with technicals, the technicals were based off of what these guys were doing behind the scenes. Retail money tried to pile into the longs. They painted very bullish picture on Microsoft. And they tried to hold support on Apple. They tried to show some bullish situations, a nice little stop hunt here, some bullish, oh my God, wow, we're going to bounce. All ended up being fake. And news came out that, you know, one of the main reasons why the market really tumbled is because Iran responded to Israel and Tel Aviv ended up being attacked. Once Tel Aviv got attacked, that essentially led to a large pullback in the market that occurred about 2 hours before the market closed on Friday. That's another reason why the market really, really tumbled. So these people began being bearish. Friday came. So they were already notified that they were going to attack Iran. They were already short. Iran ended up firing back, and it led to a major escalation and a major pullback in the market. It's not really major, but a pullback nonetheless. Okay, so I hope what I said made some sense to you guys. Another really, really good factor was we're going to go over a few different factors, right? But another one that I want to show you guys is VIX at 17. So the VIX holding $17 like this is extremely, extremely important, okay? Because if the VIX is holding a level of support, okay, the VIX and the overall market have an inverse relationship to each other, okay? So if the VIX is rising, that means the overall market should be getting a pullback, okay? So now if the VIX is at a level of support, what happens when something is holding support very well? It means that it's going to bounce. And the longer the VIX was holding this level of support, this looks very, very similar to how the market as a whole was starting to show some weakness. NVDA was showing stagnation at a level of resistance. The VIX was showing stagnation at a level of support. What ended up happening? NVIDIA bounced. As NVIDIA bounces, the market as a whole drops. And that's exactly what ended up happening. The VIX bounced and the market fell. Inverse relationship. That is one other thing. And then just to really, really top it all off, look how beautifully perfect this is. This is a trend line from months ago. This 605 level is from months ago. And look at exactly where I did not touch this. Look at where we ended up closing right below on the 12th. Look at where we ended up wicking above on the 11th. Look at where we ended up failing and showing stagnation. It doesn't get much cleaner than this sometimes. So it was a really just simple, easy opportunity not to be aggressively bullish, and it really, really worked out. And to top it off, another thing that we can really look at is for the month of June. This is the seasonality chart of the S&P 500. For the month of June, we get a bit of a pullback here in the middle of the month. Sort of ended up happening, and we get a bigger pullback into the end of the month. So let's see if that ends up occurring as well. So it's overall, June is not a great month for the overall market. So far, that's what's occurring, sort of. And honestly, with that being said, what's going on in the Middle East right now is a very, very, very major development. Iran being attacked is going to cause a massive spike in oil. Oil prices are going to spike very, very heavily. During 2003, when the U.S. invaded Iraq, oil was almost $6-7 a gallon back in 2003. Right now, I would very, very heavily expect oil to start jumping above $12-13 a gallon. If Iran, number one, closes the Strait of Hormuz, makes it very, very difficult for British, American, French Navy to enter and to have a southern, basically a good formation to attack the southern part of Iran. If they also do that, that's going to stop trade, and that's going to hinder oil supply, okay? And if Israel and America, Britain, France start to attack Iran, that is going to cause a massive spike in oil prices, period, point blank. This is just the beginning. This is a daily chart of crude oil. This is just the beginning, guys. We jumped 20% intraday, but then we ended up closing. We jumped 13% in a couple of days. This is just the beginning, guys. So that's my opinion. If crude oil begins to really, really skyrocket, that's going to cause a massive disruption in equities. That's going to cause a massive disruption in the overall stock market as a whole. So just be very, very careful about being extremely bullish while this conflict is in the early stages. While the conflict is in the early stages, as we're getting news about Israel and Iran attacking each other, be very careful about being short-term bullish in the market, because crude oil is going to get a pullback. Crypto is not going to be as strong. The overall market is going to be bearish. So just be very, very careful. Be very, very careful and be very, very vigilant. Once boots hit the ground, once physical troops enter the space of another country, that is when the market starts to show some sort of a bottom. That's when it makes the most sense to start leaning long. Right now, very, very difficult to do that. All right. So I hope this made sense. I hope you guys enjoyed today's video. Please let me know if there's anything else that you guys would want me to add or talk about. But for now, this is really it. Aside from that, this is really the main topics of conversation so far. If there's anything else to talk about tomorrow, I will come and give you guys my thought process. Maybe Sunday after futures open. But for now, this is really it. I'm expecting a massive spike in crude oil. I'm expecting a massive drop soon, probably, in the overall market as crude oil starts to bounce. So just be careful. Careful about that. Lean bearish. Once boots hit the ground, start to become bullish. All right. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys soon. All right. Take care. Have a good one.